FCUV stock, Focus Universal Inc. It gained 25.68% in this last trading session of the 15th of June 2022. We haven't found any reason for that rally, and only 213,000 shares across the tape, which is above average. Mind you, the float for this stock is about 17 million. It seems the stock is quite illiquid. We can see that only 200,000 shares is responsible for a 25% gain in the stock, and the average volume for the year is about 500,000 shares. Probably there isn't a huge amount of interest on the stock of late. Sometime last year, it rallied hugely, and the volumes were huge, very huge, and since that time it has dried out. And we can also see that the underlying trend for the stock is a bullish one. You can see the 200-day moving average has started to form because the stock has started to mature. It is getting close to a year since it went public, so this yellow line here, the 200-day moving average, is, you can see it's short, indicating that it hasn't really been trading for a very long time. But even at that, the underlying trend is a bullish one. It's in the high. In recent times, it started to print higher highs and higher lows. It was just of late that it printed this low below the 20-day 200-day moving average as of just the Thursday last week. Thursday the 9th of June, it dropped to below its 200-day moving averages. From there that it rallied to where it is right now. So what we have noticed is that it seems the overall weakness we have seen with growth stocks isn't really affecting FCUV that badly. It's not really. It does retrace, but it's not. Despite all of those things, it's still maintaining its bullish trend. That's what evidently you can see here. All the other moving averages are sloping slightly downwards, but not showing a huge amount of weakness, because the stock has always returned fire each time it falls below them, ensuring that they're all bunching up together. It's drops, you can see how it's cycling upwards, and it just has ensured that those moving averages, the 10, 20-day, 50-day moving averages, haven't their divergence isn't that much. You can see the 10-day moving average at $12.1. The 20-day moving average is at 12.62. The 50-day moving average is at 12.69. So, but we have also noticed a pattern here. The average from here, the middle of February, we will also notice that the peaks from these peaks, it has always retraced by about 24%, or rather by about approximately, on the average, 25% each time it peaks. In about 2 trading sessions, it loses 25% of what it gained. But we have also noticed that it's usually these peaks, apart from this one, these other peaks are usually at the end of every month. These 3 peaks are at the end of every month. It is just this one in the middle of November, and this one we also seen today, that are in the middle of the month. This is middle of February, this is middle of June. But all in all, the average retracement is about 25%. This means that given this rally, it ran up today. It accumulated today, the 15th of June. We expect it to drop to $10.39. $10.39 will be slightly above its 200-day moving average, 10.39. We'll put it somewhere here, 10.39. Let's get 10.39, 10.37. Okay, so it's just okay. It's below its. It will bring it below its 200-day moving average, and then we have seen what has happened each time it drops below its any moving average as such. There's a good chance it's going to bounce back, given the pattern there. So, and as such, we also expect it to bounce from there. We expect it to bounce from that 10.39 upwards. bounce from that 10.39 upwards again by about 30%, so that will make it 10.39. a gain of 30% will also bring it about to where it is at the moment, so or slightly above it. So given all of those things, let's see whether we can plot a Fibonacci grid and compare what we have, what the support we have calculated based on a pattern, and see what the resistances are. Okay, let's get this right. Okay, so we have been able to plot this Fibonacci grid. This is from the peak of the all-time, it's 52-week high. Okay, so we have that the resistance, one of these resistances is where it is right now, 13.87. So the next support we have is at 12.19, and then we have another about 10.59. So somehow we are slightly not too far off from where we expect it to fall. You can see that there's a 10.59 support. So somehow the pattern we have used is to some extent not that far off, not that bad. So it's quite relatively good. So 10.59 is what the Fibonacci grid is indicating, and we have a support of 10.39, but at the same time the resistance will be 12.19 and 13.83. but so far there are indeed other resistances that are not taken into account, these ones here, 14.49 and all that stuff. So we can always go ahead and see whether we can plot Fibonacci. Okay, let's see, it's gonna fall from there. That's 10 point. Okay, let's pick it from 10.39. That's we add roughly $3. Let's add $3 to this, minus $3, we get 13.39. okay, no, we yeah, okay, we have a difference of already to 13. We have a difference of 3. Okay, we have a difference of 3 multiplied by 2.618, 7.85. we add that to 10.39, so we have $18.244. so that's our projection, 18.244. that will take it all the way here. Is that possible given the systemic decay we are finding right now? Okay, well, let's keep that target, $18.244. that's what we expect it to spike to if it retraces down to 10.39. so see what you make of all of these things, and I'll continue to update you concerning FCUV stock. And before that before I close this video, we can see the short interest is about 7.05%, but you can see short interest ratio is about 16.4. it's going to take about 16 days to cover. So that's also, even in as much as the short interest is not wonderful, but the short interest ratio is also of interest. It's also of interest. It's just looking back, but at the same time, what could happen is that short sellers could begin to panic because of this. This is, it's 16 days. They'll be looking at this and saying, we're going to have 16 days of torture, the 16 days of pressure to close our short positions. And what may happen is that if stock market participants are confident, they can start to squeeze the stock. And when they begin to, because of this 16.4 short interest ratio, when they do begin to squeeze it, the stock begins to rally. There's also, if it begins to rally, there's a good chance the short interest may also continue to increase. You can see that it increased of recent by 21%. So it's a stock to watch. Short interest is not healthy at the moment. It's also, the stock itself is not all that liquid, but this 16.4 short interest ratio can make things begin to change, can force the short interest to begin to increase. So once again, our target is 18.244. It is a hugely ambitious target. Don't rely on that. This is a growth stock, and there's a wider economic issue. As a matter of fact, experts are warning people not to really buy anything out there at the moment. But it's up to you to decide whether you're going to buy or not. We can see the underlying trend is a bullish one. The stock has continued to defy the economic challenges going on out there, and it's definitely a growth stock, a tech stock, IoT stock, and all that stuff. So this is not an advice to buy. This is just an analysis of what the potential for the stock is. So thank you very much for watching this video.